Hey, what's going on? My name is Fred, and in this video, what we're going to talk about is why did your credit scores drop? So before we get started, just want to do a couple of housekeeping items that I want to get off my chest and get over to you. So if you can go ahead and subscribe to the channel if you find any value with the video you're going to watch. If you like it, give me a thumbs up. If you have any comments, please leave a comment. And then also hit that bell notification so that way whenever I drop a new video, you'll be notified of that. So let's go ahead and get started. Like I said at the beginning, we're going to talk about why did your scores drop. A lot of times we have clients come into the program and certain things go on with their credit and they want to know why did it happen. So what I'm going to do is I'm going to talk about some of the reasons that could affect your credit and make your score drop. Okay, so the first thing I'm going to talk about is why did your score drop is you could have late payments or just miss the payment altogether. Whenever you do this, whatever happens in the last 24 months is going to have the biggest impact on your credit, on your FICO score. So you want to try to make sure at all times that you make those payments on time, right? If you're not able to, reach out to the creditor, let them know you're having a financial difficulty, ask them if they could work with you on maybe pushing out your payment due date. It's not necessarily that they're going to make that happen for you, but it's always better to reach out prior to that negative action happening, right? Maybe they can postpone a payment or two to help you get back on track, get back on your feet. So you always want to reach out to the creditor and ask them, right? Another thing, applying for too much credit. A lot of times people come into a credit repair program and they think just because if they're in the program that they can just go apply for credit and they're going to get approved. That's not the way it works. We strongly and highly recommend not applying for credit more than twice per year. Okay. If a company reports, let's say a company like Capital One, let's say they report, you apply for a card with them. They're going to report the inquiry to all three credit bureaus. And so you want to just keep this in mind. It's always good also to have credit monitoring in place. So that way, if there is an inquiry placed on your credit report, you'll be notified, then you'll be able to track that. Something that, again, you want to stay under 2 in a 12-month time span. Now, inquiries, they stay on your credit report for 2 years, but it only affects your credit score for the first 12 months. So just keep that in mind. Try to keep those inquiries to a minimum. Otherwise, you can have issues with your score dropping. Now, a lot of times you'll hear people talk about inquiries are this many points. You know, I went and tried to buy a car and my score dropped by 100 points. That's not the case. Okay, so when it comes to your FICO score, inquiries counts towards 10% of your score. They call it new credit, but it counts towards 10% of your score. Now, the way a FICO score works, you have a low range of 300 and a high range of 850. So that means the lowest score you could have that's scoreable would be 300 and the highest would be 850. So what we do in the industry is we kind of take that spread, which is 550 points. That's the 850 minus the 300. It gives you 550 points. And then we take 10% of that, which would be 55 points. So the most you can actually lose on this section of your FICO score is 55 points. So you could lose 20, 30 points just by doing too many inquiries. So you want to keep this in check, keep it in mind whenever you do apply for credit. A lot of times people will go to Macy's or Sears. Well, they don't have Sears no more, but Macy's or JCPenney's. Pretty much all these companies, when they go shopping and they ask you, would you like to apply for a credit card and save 10%? Now, if you're going to be saving 10% on a $30 purchase, it's not really worth it, right? You're going to save a couple bucks. You know, it's okay. You don't want the inquiry. It's not worth that. But now let's say you do have good credit. You have great credit, right? For this example, you have great credit. And you're going to Home Depot. You're doing a whole rehab. You're rehabbing a home. Let's say you're doing a whole new kitchen and 2 bathrooms, right? And let's say all the material is going to cost you $17,000. That might be a good time to go ahead and use that 10% discount, right? So if you could save 10% on a $17,000 cost, you're saving $1,700, which is going to be beneficial for you. Okay, it might be worth that inquiry. Okay, but just keep in mind that one inquiry, you have, for that full 12 months, you can go ahead and maybe rack up one more. So you want to be very careful and considerate as far as when you apply for what you're applying for and what type of benefit it's going to give you. Okay. Third thing is utilization. A lot of times people won't have any credit and they got to go through the credit building program process, and they go get a credit card. They do a deposit on a card to get a secured credit card, and then they max out that credit card without paying it down. It's okay to max it out, but prior to maxing it out, you want to make sure you reach out to the company, ask them, hey, when do you report to the credit bureaus? And just make sure you have your payment in 3 days before that date. So that way it gives it time to process the payment. So that way if they receive it, say on a Saturday, they'll be able to process that payment before they actually report to the bureaus. So it's very important that you find out the date that they report to the credit bureau and keep a note of that. So that way when you do have a bill coming due, you know, hey, I want to pay this off before this date. So that way it reflects a zero balance or a paid down balance, right? If you're maxing out your credit cards, this part of the FICO score counts for 30% of your credit score. Okay, so 30% of that 550 we talked about is 165 points. So by maxing out your credit cards, you could be losing up to 165 points. So it's always good to keep this number anywhere between 1 to 7%. Once you go above that 7% range, your score will start to dip. The higher you go, the more points you're going to lose. Okay, so just keep that in mind when you're out spending. If you can't afford to pay it in full, you might want to rethink that purchase to make sure that you're just doing something, again, that's going to benefit you. Because you never know when you might need the credit. You never know what might happen. If you don't have your emergency fund in place, if you lost a job and then are unable to pay your bills, what are you going to do if you're overspending, not really have the money to pay down that debt? So utilization is very key. It's very important to always keep this number in mind. Know where you want your balances at. Okay. Fourth thing, sometimes we saw this a lot in 2008 when the real estate crash happened. What credit card companies were doing is that they were slashing the credit limits, right? So let's say you had a $10,000 credit limit and you had it maxed out, for instance, right? And let's say you made $1,000 payment and brought the balance down to $9,000. What the companies were doing is they were reducing your credit limit. So now instead of having a $10,000 limit, they reduce it down to a $9,000 credit limit. And they would keep doing this just because so many people were going into default with the credit cards in their homes and their cars that they wanted to be able to do something to help protect themselves. And this is what they were doing. What it was doing actually, it was driving people's credit scores down. And then when they go to reapply for credit, now their interest rates are hiked up. So inadvertently, the banks were winning with this and the consumers were losing. So that's why I want to make sure that you guys understand the importance of reviewing these types of things. Okay. Another thing that could lead up to your credit score dipping is closing accounts. So a lot of times people will go through a credit repair program. They'll start the rebuilding process, but when they start it, they're working with secured credit cards, right? But once they've built up the history and started to keep things on track and understand kind of how the credit works, what was happening is that they started closing down accounts. And when you do this, you lose a history of that account. So sometimes people would have a long history of, say, 4 or 5 years on a credit card, but they close the account down. So once they close that account down, that account no longer counts towards your history. People's scores were dropping. Okay. I'll give you a prime example of myself. I had a 6-year loan on a vehicle. I paid it off on month 36, so I paid it halfway through. As soon as I made that payment to pay the car off, my score dropped 66 points. Okay, and that's because I lost the history of that account. Now the score did rebound, and within about 3 months or so, I was back into the 700s, but it did drop me down about 66 points. So it's something that you want to be aware of. If that's something that is going to happen anyway, just understand that your score will dip because you're losing the history of that account. Okay. Inaccurate info. So when I talked a little bit ago about credit utilization, credit usage, what this is based on your revolving credit. So a lot of times what happens is the credit bureaus will have inaccurate information on your credit report. It may be incomplete, and by being incomplete, it could actually hurt you. So it's always good to keep credit monitoring, so that way you can check and make sure that everything that's reporting on your credit report is in fact accurate. If it's not, you want to make sure to challenge the information. Now, one thing that happens a lot is that the credit bureaus and the furnishers, they don't report the actual credit limit. They might report a high limit. Now, let's say you had a $25,000 credit card, right? You had a limit of $25,000, and let's say you had a high balance of $19,000, right? Now let's go down a little bit. Let's say you had a high balance of $4,500, right? So you're under 20%, right? $4,500. Now let's say that they're reporting the high balance, but they're not reporting your $25,000 credit limits. Now it's actually looking like that high balance is your credit limit, and now your balance is $4,500. Now it looks like the card is maxed out rather than being under that 20%. Okay, these are types of things that you got to look out for. So it's definitely something that you could do. I'll leave a link in the description below in regards to how we run our credit repair company, the credit monitoring company that we use. They've been pretty accurate as far as what's reporting across the 3 bureaus. There are other credit monitoring companies out there, but what I've noticed is that the information isn't really accurate as far as how much information is placed on there. And this company that we use by far has the most information, and that's why we use them. Okay. Inaccurate. Okay, and the final thing that we're going to talk about is something major happened to your credit report, whether it's a foreclosure, a repossession, charge-off, collection account, something new like that pops up. Like I said at the very beginning, anything that happens within the last 24 months affects your credit the most. And in this case, having something like that pop up can actually have a very negative impact on your score. I've seen scores dip over 100 points by having something new derogatory that pops up on the credit report. So it's something very important to keep to be aware of. Remember, like I said, if you know you're going to be late, I don't care if it's on your car payment, house payment, your mortgage, credit cards, whatever the case is, reach out to the company and ask them how they can help. Just let them know you're going through a financial difficulty right now, and you need some type of assistance to help you make sure that you're not going into default with your credit. Ask them if there's any way they can defer payments just to help you get back on track. Whatever might happen. We all know life happens. So it's something that you want to keep in front of. You don't want to be reactive. You want to be proactive. So you want to go attack the things before anything bad happens, right? Because if you bring it to them before it happens, they're a lot more lenient, a lot more willing to work with you. Okay. So with that being said, just wanted to go over that stuff. It was on my mind, so I wanted to go ahead and talk to you guys about it. Like I said at the beginning of the video, I'd appreciate it if you'd subscribe to the channel. It helps our channel grow, right? If you found the information I talked about today useful, I definitely like a thumbs up. If you could like the video, that would help out tremendously with the algorithm. And if you feel somebody else could benefit from it, share it, put it on your page, social media, whatever. It definitely helps us as far as getting information out. I mainly deal with credit, but finances has everything in me. I'm so passionate about it that I want to make sure that I get the information to as many people as possible. The goal is to reach 1,000 people per year. I fall short of that. But as long as I shoot for the moon, if I miss, at least I land among the stars. So with that being said, again, I thank you for watching the video, and leave a comment. Let me know what you think. If you have any questions or concerns, leave it in the comments below. If you want me to talk about something, leave it in the comments, man. Let's talk about it. Okay, so with that being said, appreciate your time. Have a good day.